In this video, I'm going to show you how you can go from $1,000 to $101,000 investing on YouTube and why you want to. It doesn't sound like it's going to be a hard sell. With how crazy and accessible the stock market's been, YouTube portfolio updates are trending like no tomorrow. However, we rarely get someone's actual return on these portfolio updates. Even the most popular and successful YouTubers rarely, if ever, give us the actual returns they made. Today in this video might actually be the first time where you see someone's real investment performance, and I'll prove it and show you why. What's up, opportunity cost investors? If you're new to the channel, welcome. We are like the Mythbusters of finance, where we cover topics from when people miscalculate or miscommunicate their performance, all the way to the tricks we all fall victim for when we're looking at bank accounts. This channel hopes to help make you smart money-making decisions and to help elevate the financial community. Now, when we hear people talking about stocks and their portfolios, either at the cafeteria or at work, or on these YouTube portfolio updates, about 99.9% of people aren't bragging. Instead, they're just very generous and showing us how they made money and how you can too. Personally wanting to do the same, and as an investor for nearly 10 years now, I decided to swing into action and open up a Robinhood stock account where I'm going to walk you through my portfolio updates and my journey from $1,000 to $101,000 so that way you can do the same, and so that way we can all get the information we need to make the best decisions. Now, whether you have an audience or not, the information that I'm about to show you in the process is going to be so valuable for you deciding what investment choice is best for you. And I get it. Investing can be pretty complicated and overwhelming at times, but that's why I'm here to walk you step by step and keep things very simple, starting at why I chose to open up a Robinhood brokerage account. Now, personally, I feel there's a hierarchy where you put your money. Investing in yourself and your education, starting a business or funding a business venture, tax-advantaged accounts, and then brokerage. Personally, I have yet to max out my tax-advantaged accounts, but I'm using Robinhood as a tax-disadvantaged account because I feel if I'm successful at YouTube and I'm able to elevate the financial community, then the money I make through YouTube should offset the tax disadvantages from not investing in the more efficient accounts. And that's my risk that I make, and why this video isn't a how to invest your first $1,000 or how to invest for beginners, but instead is a way for you to figure out what's a good return and all the information you need to find it. And if you find this content helpful through watching this video and you want to support the channel, make sure you like that smash button and buy stock in that subscriber count. But let's get back into it. Why did I start with $1,000? When starting a portfolio update, you really start with anything. I chose $1,000 because I wanted something that was significant to me. My first investment was $1,000 that I saved up in tip money working at Dunkin' Donuts, which I used to purchase Vanguard's Star Fund, or VGSTX, so that way one day I can convert it into VFINX or VFIAX, which are Vanguard's S&P 500 index funds, once I had enough money. Additionally, I also did a video where I was reviewing JJ Buckner's portfolio update, and I told my audience that they had a massive potential to do the same thing he's doing starting at $1,000. Now I want to discuss the contribution and withdrawal plan for this portfolio. Now, naturally, most of us are pretty bad at calculating and communicating performances, myself at times included, and I don't blame us because it's really hard. Which means that the portfolio with the most aggressive contributions is going to have the highest perceived return. For example, if you had one portfolio that went from $1 to $100,000, it's going to seem a lot better to a lot more viewers than one that went from $1 to $90,000, even though the $90,000 one might have actually outperformed the $100,000 one depending on what the contributions are. However, we can't go crazy with these contributions because at some point we lose the relatability to our audience. For example, putting in $10,000 a month isn't relatable to a lot of people. So there must be a balance. And I was thinking, for most people, it would probably be relatable to do $400 or $500 a month, because that puts us at the $100 a week. But I want to do it a little bit more aggressively so the perceived return's higher. So my plan is to put in $1,000 a month to get that perceived return higher and still be relatable to the audience. Now, with the ground rules out of the way, let's talk about my performance and how this portfolio actually did. Now, before I jump in, I'm going to warn you, it is a jargled mess, but this is the exact way I have to say it. So just brace yourself, and within time, it'll all make sense to you. So here it is. From September 23rd, 2020 to October 4th, 2020, so about 2 weeks time, My Robinhood stock portfolio, which makes up only a small fraction of my overall asset allocation, made a money-weighted, annualized 58.75% pre-tax and 42.45% after-tax, including dividends. Meanwhile, in the same time, under the same conditions, the S&P 500 with dividends reinvested made 36.74% annualized. These figures exclude all the free stocks that I get from referrals. Whew, almost ran out of breath saying that. I can't tell you how long it's taken me to memorize just that part alone, but I got through it. Here's the next part though. That means if we were to sell the entire portfolio today and put all the money into the S&P 500, we would be better off today than had we invested everything in the S&P 500 from the beginning, which sounds awesome, right? No, it actually doesn't tell you anything. And the reason is because we don't have the consistency, and that's what really matters when you're trying to beat out the S&P 500. Could this have been luck? Could this have been skill? We don't really know, but time will tell. I just want to reiterate that this isn't a video on how to invest your first $1,000 or how to invest for beginners. In fact, as it stands right now, more than 97% and arguably 100% of my overall investments right now are invested in the S&P 500 index, which is a serious recommendation of mine, but that's for a different video. Alas, the long-awaited Robinhood portfolio, finally, right? As you can see, I have $1,020.42 as the ending balance, but you have to keep in mind I also got a free stock for signing up for the app, so none of this information or this chart's gonna help us, so we're just gonna scroll right down to the holdings. First being Helka Mining, which is the free stock that I received for signing up to the platform. Personally, I'm not going to do anything with these referral stocks, and I'm going to exclude them from my analysis. However, the beauty of interpretation is that's up to your own analysis. I'm going to give you everything and all the information you need to decide for yourself, but personally, I like to exclude them and I'm not going to do anything with them. And I'll cover that in a later video. So let's move on to my actual holdings. First off, we have Bank of America, about 90% of my holding, and Discover Stock, which is about 10% of my holdings. Now you'll notice that that's it. And I'm not really diversified, and that's not my core principle. As opportunity cost investing, which I can go super in depth on later, and I will, when that $1,000 reaches my hands, I want to put it in the area of my best interest within my circle of competence, which so happen to be 90% Bank of America and 10% Discover Stock. As I continue to do this, I will become diversified by nature, but that's not my intention. I always want to put it in my best interest. And again, I'll cover that in a future video. Lastly, nobody's perfect, myself super included. I'm going to make tons of mistakes along the way, and I'm sure as I grow in popularity, which hopefully I will, that YouTubers will end up critiquing me as karma will come around and bite me in the butt for all those lightning rounds. But that's to be expected, and that's how we grow as a financial community. Now, keep this in mind. A couple of years ago, I was sitting in an office listening to Graham Stephan tell me the same thing, that by doing what I'm doing, you have so much value to add to yourself and to the people who will listen to you. At the time I wasn't ready, but I'm ready now, and I'm super excited to provide this portfolio journey with you, and I hope you're excited too. But before I do, I have to be fair to all those people I was critiquing and bring this portfolio update into the lightning round. You were like, I'm going to be very harsh here, 10, 2, and 9, and that's because when I used my benchmark, I used the S&P 500 total return and not what I'd actually invest into, which would be Vanguard's S&P 500 index funds, either VFIX or VOO. And the only reason why I didn't use those is because I haven't done the math to see if there's an accurate depiction of what the performance would actually be. And I'm okay with using total return because it's going to overestimate the performance of the benchmark, which is more conservative when we're doing opportunity cost. So I'm okay with that for now, but I'm going to be harsh on myself and drop myself to a 9. Also, I'm going to go right to an 8, and that's because I was super hypocritical and did not give you my asset allocation. Sure, I told you 97% of my portfolio is the S&P 500. However, I didn't tell you exactly how much, and it's not fair that I've been hammering this about other portfolio updates and I didn't give you the accurate number. And the reason why I did this is because an asset allocation video is coming soon to you, and I didn't want to give anything away just yet. But in future portfolio updates, I will most certainly give you asset allocation. And just one more thing. 8 to a 7, and that's because of longevity. Actually, maybe I won't. Because just the nature of the portfolio journey, and because I make up the rules. Maybe that isn't fair. Okay, editor, go ahead and drop me a point. Yeah, you can drop a point, editor. Go for it. Wait, Too many points, editor. No! So there you have it. In fairness, I give my own portfolio update a 7 with hopes that one day we'll see a 10. And even though I have so much more I want to tell you, I mean, clearly I've said in a future video like 10 times. That's it for this video. I hope you found this content helpful. If it brought value to you, I hope you consider liking that smash button, buying stock in that subscriber count, and Liberty Belling that notification icon. Also, at the end of the video, I now like to do shout outs. So this one goes out to Maya at Intriguing Investments, who's such an active community member on the finance YouTube space and has been one of my greatest supporters of the channel. Thank you so much, Maya, and thank you everyone for watching. Until next time.